What I'm going to talk about today is what a lot of people are seeing on social media. There's a lot of what I would call influencers and people that are promoting life insurance and, most importantly, indexed universal life. What you probably hear about them are it's tax-free income, there's no stock market loss, and you get upside of the stock market, which those are true. But what I'm going to sit here and compare that to an actual life insurance policy and show you that that is not how these are intended. Insurance is meant for insurance. So let's dive in. So the first big misconception of these of no market loss. Someone's going to say that your money can't lose anything due to market fluctuation. There's always going to be a flip side to it. They're going to put a cap on that. And typically those caps start off at about 8 to 10% in the first couple of policy years. But with every single IUL, what these insurance companies have the right to do is limit that cap. So each year it starts at 8 or 10, they can lower it. So the S&P returns 20% in the first year. You get 15 years down the road as they've lowered those caps, you see another year where the S&P 500 returns 20%. The cap on that might only be 5. So you don't lose when the market goes down, but you're also not gaining the full context of it. Another issue that I see with these are the cost and structure of these IULs. Let's take a look at this example here on the screen. This is an annual statement for a life insurance policy that was purchased some odd years ago. Monthly premiums were paid of $75, and you can see for the year, which would total $900 for the year. Every month there's a premium paid. There's a premium expense charge. There is a policy expense charge, and there is a cost of insurance associated with it. So on an annual basis, you pay $900, but a good chunk of that goes towards all of the expenses of the policy. Just doing simple math, the $900 you paid, only $228 of that for that year was put towards the cash. As you can see, the $900 of premiums that were paid did not all go towards the stock market. It's an insurance policy. There's going to be costs associated with it. And also when they run these illustrations and show people like, wow, I put $900 a year into this policy, see what it can grow, they're assuming that those cap rates remain at about 10% over the course of the life of the policy. The third issue that I see with these policies are what's the tax-free income that is promoted on them. Now, yes, if you were to take loans against your policy, a loan is not considered taxable income. So yes, the money you receive off of the cash that has accumulated is in the manner of a loan is not subject to income tax. However, the loan is eating away at the policy's cash value, the cash value that helps pay for some of those internal expenses. Each year you own the policy, the cost of insurance goes up. As you get older, it costs more to insure your life. So you're paying more for the cost of insurance today, means you're paying less down the road because the premium remains the same, but the costs are a lot higher. So as you go to take loans against your policy, that's eating up against that cash that's helping to keep that policy alive. What happens when the policy runs out of cash? Well, number one, you could cut a check to put in a policy and keep it afloat. But if that number is astronomical and you can't afford it, you lose coverage. And all of those loans that you took out over all of those years, in the year that you incur the policy lapsing, all of that is subject to income tax. Now it depends on cost basis and things like that, but there will likely be a pretty sizable tax liability if you've taken multiple loans out of the account over the years and let the policy lose coverage. Some people ask, well, when do these IULs make sense? Well, the reality of it is most people in the United States aren't going to benefit from these tax-free benefits because there's so many other options and vehicles that people can put their money away that have tax advantages to them. You have Roth IRAs, taxable accounts, traditional IRAs for certain scenarios, And there's just a lot of different ways that you can get tax advantages without using life insurance policy. So the most common areas that you see people use these, are high income earners, people that don't meet thresholds to contribute to Roth IRAs. If people have maxed out other options, if you've already maxed out your employer 401k, you've already maxed out your Roth IRA, your income threshold doesn't meet the requirements for you to contribute to those, that is where it would be considered an option. And one of the largest ones is for estate and legacy planning, as the death benefit of all life insurance is tax-free. It can be used as a way to pay tax bills upon death, pay for estates, use the money to pay for certain things after someone passes that otherwise may not be accessible, with their current investment portfolio. For the life insurance comes in the form of a check, and you can use the proceeds as needed. Now, me with my practice, like I said earlier, life insurance is insurance. There's no, I don't use it as an investment vehicle. There's much better ways to go about trying to find tax-free dollars if that's what you're looking for. Benefits to current IULs and other insurance is now a lot of these IULs come with long-term care riders or chronic illness riders, where the death benefit can be exhausted out over the course of a few years if you were to ever need any sort of nursing home care or long-term care. Those are current benefits that I see uses for them. A big picture, if you're ever presented with someone who's trying to sell you on a life insurance policy, always talk to someone. It's just best to work with a financial planner when it comes with purchasing life insurance. There's different types outside of IULs, and make sure when doing so you just explore all the options. If you'd like to learn more, you can go to my website, financialplanningwitheddie.com. You can also schedule your free initial consultation with me on the scheduling link. Hope you enjoyed the video. If you did, please like and subscribe, and follow me on Facebook and Instagram, Financial Planning with Eddie.